I'm attorney Victoria Alvarez, and welcome to the Financial Literacy Project presented by the American Bar Association's Tort, Trial, and Insurance Practice section, or TIPS, and Thomson Reuters. In the next 3 video segments, we're going to discuss budgeting, how to create a budget, available apps and tools, and personal savings. By the end, you'll have a better understanding of your personal or household budget and free and easy tools to manage your money. Importantly, you will be able to use the knowledge gained here year after year and share it with friends, family, and members of your local community. In the first segment, we're going to talk about what a budget is, why you need one, and budgeting terms you should be familiar with. But first, because we're attorneys, we always have a legal disclaimer. Please read our legal disclaimer in full, but in sum, these materials and any forms referenced are intended for educational and informational purposes only. A budget is a plan you create and a system you follow to manage your money. It shows you how much money you make and how much money you can spend in order to meet your needs and save for the future. A budget isn't about not spending money on anything. It's about prioritizing your spending and choosing to spend on what gives you the most satisfaction and enjoyment. It's also about saving, so you have money on hand for emergencies and other unexpected expenses. The main reason to budget is to establish financial freedom. To have more money, you have to know how you spend it. A budget and the process of making a budget will help you see where you're spending unconsciously or spending too much for things that you don't actually value. This, in turn, will help you provide security over your monthly finances, as well as in the event of unexpected expenses or emergencies. And it will give you the freedom to make choices that allow you to enjoy your life today and in the future. Before you start budgeting, there are some common words and terms you'll hear, so it's helpful to lay the foundation. An asset is something that you own, such as money in a savings or checking account, a car, a home, a property, or business inventory. A liability, on the other hand, is something that you owe, like a loan on tuition or a car or mortgage on a house. And a subset of liabilities is debt, which refers to money you borrowed and will pay back at a later date. An equity is the value of your ownership, which is typically the difference between your asset and your liability. So if you own a car outright and you didn't take out any loans to help you pay for that car, then your equity would be the value of the car. But if you did take out loans, then your equity would be the value of your car minus the liability you owe for the loans. And a balance sheet provides a snapshot of what you own versus what you owe. It's a report that lists your assets, liabilities, and equity, and is helpful for budgeting. Additionally, an account involves an arrangement where an organization, such as a bank, accepts your financial assets and hangs on to them for you so you can use them as you wish. And you can have many different kinds of accounts, but 2 important ones are savings accounts, where you put liquid assets like money, and checking accounts, which allow you to use your money to pay for things you owe or to buy things. Additionally, an account more generally can mean a statement that summarizes all your transactions that affect your assets, liability, and equity. This is similar to a statement of your cash flow, which just means the movement of your money into and out of your accounts. This includes your income, or money you earn that is coming into your accounts. There are a few different types of income. Your gross income is your total income, so the entire amount you are earning before you factor in taxes and other deductions. Additionally, your net income is the income you earn after you account for taxes and other deductions, and it can be thought of as the actual money you have left to spend. Your cash flow also includes your expenses, which are things that you spend money on, including food, rent, clothes, and transportation. This is the money coming out of your account as you spend parts of your income on things you need. Your fixed costs are things that don't change over monthly periods, like rent, loan payments, insurance premiums, or mortgage payments. These are different from your variable costs, which do change from month to month and include things like groceries, clothing, and utilities like electric, gas, and water. This is all important because when you are budgeting, you need to be thinking about how much you're earning or your income, as well as how much you have to spend or your required expenses, so that you can figure out how much is left over for you to either save for emergencies or to spend on things you would like to have. You should now have a general understanding of what a budget is, why you need one, and what terms you'll see as you get started. In the next segment, we'll answer the next question you're likely to have. How do I budget? And in doing so, we'll discuss the different types of budgets and budgeting tools you can try as you find the method that works best for you.